Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Wednesday, and we're now at the 10th of July, 2024. Time right now about 5:45 p.m. Central Time. So there's a big event in the morning and one that we all have to keep our eyes on, and that event has to do with this. You're going to get the June Consumer Price Index. Now, normally I don't show you all the estimates here, but I'm going to give them because it's such a big report. The CPI is forecast up 0.1% on the month over month, and that compares to May's flat number. Then we look on an annualized term and we see they're expecting it up 3.1% from a year ago month. The core CPI is expected up 0.3 in June compared to May's gain of 0.2, and we're looking at the year-over-year figure at up 3.4%. So the market is building in a very small gain, not a decline. That in itself is important. If it hits the forecast, the Fed will have reasons. Get numbers larger than this, and I'm telling you, you've got a problem then with the idea, so many think, of a September cut. Come in well under that, it probably puts one of the nails in the coffin in the sense that the month of June was one of these months where labor rolled a bit and then CPI rolled. Jobless claims are going to come out in the morning, and they're looking for them down 2,000. Energy analysts will see the report come out at 9:30 in the morning for the natural gas. And the EIA, DOE, there's so much to talk about there. The DOE announced today that they want to buy another 4.5 million barrels of oil to replenish the strategic reserve. Prices are now higher than their target price. They put out a price around 79 and a half. We're about 82 and a half. So the market would have to fall $3. And the bid's only good for another week. So we will see if they get that done or not. No way to know. So let's go to the markets and take a look at what's going on. I wrote to my subscribers today that what we're in right today was the market picking up positions. People would be leveraging themselves for tomorrow morning's CPI number. And how they react to it, well, we'll find out. You do realize you're up near the 5,700 level in the S&P and the futures. Many analysts were only looking for this year to be first 5,200, 54, then 56 by year end. So now you're getting closer to the 6,000 level. That's the way you have to look at it. And we will see. There is a point at which nothing grows to the clouds in the sky. Are we ahead of ourselves? By most matrices, you are. Do you want to fight that? No. When it breaks, it breaks. That's the way to look at it. There's no other way you can look at it. If you've been fighting this market, you've been getting run over. The markets that remain weaker in a relative basis have been the Dow and the Russell, although they today had pretty good rallies, so they're giving back a bit of that. Late in the day, as we were getting bids all morning in gold, silver, and copper, they gave back a lot of that late in the day. So what this is doing is catching up with where the markets were. I'm talking after 12:30 p.m. Now, let me make that clear. The settlement price is determined 12:30 p.m. Central Time. Markets trade to 4 o'clock. So when you reopen, you're looking at really where the market was at the 4 o'clock period, and the market adjusts to that, not to the settlement price. The dollar was down as most currencies were trying to rally today. You can see that they're trying to hold on with one exception. It's been the yen. It's like watching paint dry, but the market has been falling regularly, and there's nothing wrong with that. That's a nice thing to see. And on the energy markets, as you can see, the government wants to buy crude. If you go off the August, they're $3 under it. Doesn't mean they can't get it. Anything can happen in a week. And that was the other thing I was alluding to. You're getting different reports. Today, OPEC came out with their report for oil. I write about all this today, for tonight's newsletter. So they had their idea. It does not match up with the EIA or from what it looks like on the DOE. So we've got different viewpoints on where oil might and might not be. And then British Petroleum came out with their 1 year looking forward, and they most certainly don't agree with what OPEC is looking for. Grain markets, well, they're grain markets. They look at the weather each day right now. So in the gold market, we have not succeeded so far in getting back to the 18-week average of closes. Therefore, the bias of the market remains up until you're back under that. We've had a rally that, again, and I pointed out this to you all week, that you came back and you challenged the old high. Back here, you challenged the lows, and you have been caught since that early June monster break in the market. You've been caught in that trading range. When we look at the swing line, the pattern is up with higher lows and higher highs at this point. The market is holding over the 2351 level, which is the current 18-day average of closes. So at this point, what I have is the trend up via the swing line and the bias up. So that's bullish. Then we look to see where the resistance is, and from my theory, the Bollinger Band, that is stopping the current rally. It got up there and it has faltered now, 3 times in a row, unable to go anywhere, and you have an overbought market. If you're going to break out to the upside, this has to embed from here. You're not there yet. I think the pros have lightened up positions against that Bollinger Band is a bare minimum, waiting to see what the CPI does. If the CPI figures are friendly, in other words, let's call them lower than these numbers, in theory, the dollar would break, interest rates would drop in the yield, and we should see the metal markets rally off that news. If it's the opposite, just a flip-flop of that. When you look at the gold-silver ratio on a daily basis, it still favors the silver. As long as you're under the 18-day average, you need less ounces of silver to get 1 ounce of gold. In the silver market, you can see that like the gold, but not quite as many times, you got up to the Bollinger Band, you stopped, and you're overbought. So again, if you're going to get a real bull market and it's going to break out of all this, you have to embed. You haven't done it yet, you're just overbought. In the copper, you had 2 days where the market got up to the upper band and then boom, right on down. So interesting what's going on there. I'm looking at a market that doesn't have a tradable pattern. It's got a lower low, a higher high, a vertical price rise. If you look at that, it's pulled back a bit here. Got to wait and see what this market's going to be made of. It said, in looking back, this was too high, the $5 level. It's now saying the 430 level is too low. So somewhere in between is where we're at right now. But as I see it, if country after country is going to cut interest rates, the idea is to spur on economies. If they spur on the economies, copper comes into big-time demand. If it comes into demand off of that, this is basically a lower price. It's probably too low because you're not going to have a lot of supply coming at you. As the miners have told you, they're about where they're going to produce. They're not looking for big increases in production. So who's the problem? Well, it's one country, China. They consume about 50% of the copper. And if you're looking at today's numbers, they had deflationary numbers come out both at the factory gate and their CPI. They are not out of their problem. They're going to have to figure out what they do in monetary policy to try to get themselves out of this quagmire that they're in. In the platinum market, once you got to the upper Bollinger Band, as I teach you here, overbought, first challenge. I think the pros come out. You went back and now you're neutralized. You've got an uptrend. You have upside bias. You've corrected. You're not overbought. You don't have momentum pointing up. It's just waiting to see what the next event is, probably off the combination of CPI first, then PPI right behind it, and that'll be on Friday. So be ready for all this. Last, in the dollar index, we've been in a downtrend. The market got to its lower Bollinger Band. I love saying these things. And it bounced away. You can see how it hit it. We'll see where the market wants to go from here. Now, I want to remind you that we have an awful lot for you to be looking at tomorrow, and you might want to take advantage of it by taking us up on some of these free offers, be it the research, the charting services, our price counts. that we give. And when you do so and you go to our website and you choose what you want, at the end of it, you'll see a page like this. It'll be there right at the bottom. And you put in your name, your email address. If you have any messages for us, let us know right there. We typically get everything out to you within 48 hours, 2 business days at the latest. If you have any questions, call my staff. Otherwise, I'll catch up with you all in the other updates. And in tomorrow morning's update is I review the CPI number hot and heavy. Take care.